So, let's see what we got going on today, guys. Hope everybody's feeling good. I'm gonna hop over to a clean chart. If you didn't know, when you're looking for, just basic macro information on your chart, doing TA, um, you don't have to use the chart on the exchange that you're actually going to be trading on. That way you can leave all your drawings on the chart. You don't have to delete anything. So I like to have a few extra Bitcoin charts lying around that I don't mind deleting all my drawings just to kind of get a fresh look, especially when I'm doing a top-down analysis. Um, so just to do a basic recap, let me get my face out the way. Can y'all hear me good? All right, let's see what we got going on. All right, so yesterday we had a nice run up. Came up to test that $25,000 region, and we did get a sharp rejection. And so, in looking at the chart, you can see we've ran right back up to retest this area, and everything's looking really bullish. Everything's looking really bullish. The market structure is definitely looking bullish, continuing to put in higher highs and lower lows consistently. And, it's hard to be in denial about what's going on. All the perma bears are probably sitting there feeling real sorry for themselves, mad at this market. I know that thing really started to take off, and I never saw it coming. I never saw it coming. And I'll be honest with you, I never saw it coming like that. And I don't think a lot of people did. But hey, the market's going to do what the market's going to do. Nothing we can do to control that, right? And like they say, the trend is your friend until the end. And so let's take a look at the trend. We are in a strong uptrend. We're coming into some serious resistance here. Let's pull a fib out. We got a golden pocket, as you can see, it's coming up and beautifully rejecting off that golden pocket. Let's see if we got any divergences. This indicator here is very similar to market cipher B. This is called Fu Manchu cipher B, and it's a free indicator on TradingView, and I absolutely love it for the nice price of totally free. You can't beat it, right? Especially when you compare to market ciphers, quite extravagant price. And I'm not knocking market cipher, is a great indicator, but for somebody starting out, we got to use, what tools we have at our disposal, and keep starting costs to a minimum, just like any good business. And trading is a business. We're in it to make money, and that's what we're going to try to do today. We are here to make money. I'm here to help you make some money. Um, if you're new here, go ahead and hit the like button. Go ahead and subscribe. I'm going to be bringing frequent live streams your way, doing live TA analysis, and I'd love to take a look at any coins you may have in mind. Um, so I would love to see any suggestions you might have in the chat. Give me 1 second, guys. All right, guys. So yeah, we are beautifully rejecting off this macro golden pocket 618 Fibonacci golden pocket here. If you pull from that high right down to the low, you can see we're beautifully rejecting off that. Um, Now I'm not seeing any. Let's see. Let's check out. Okay, not really seeing any strong divergences. We have some small divergences on the Fu Manchu cipher B here. Nothing major, nothing to indicate that, this is an overextended retest. Um, yeah, this is a healthy pump. I don't know if I'd quite short it at this moment. I do not know if I would be shorting this at this moment. And every time we've saw Bitcoin run up in the last month, I mean, any decent trader is looking for a pullback. We're looking for opportunity to short the market, and everybody who's tried to short the market has gotten absolutely chopped up, absolutely destroyed. Um, let's see if we got any more confluence in this area. Cut on a volume profile here. Oh yeah, we're at the top of this range again, testing the same region we got rejected from yesterday. And I will go ahead and tell you guys that if you look at this volume profile, we can see how little volume is traded in this region. And if we get any kind of substantial move past these areas of previous resistance right here, then it'll be a swift move up. Now, I wouldn't be surprised to see a sharp rejection from that area, much like this one we see right here. Same scenario, came down the same way we're doing now. Price came down, tested this whole area of volume, grabbed all the liquidity, and carried on. Initially, you had the first harsh rejection right here. Price action moved down, filled that gap, grabbed liquidity, moved back up. That was the initial move. And so, what we could probably expect to see, the same way when price came down, scooped liquidity, moved back up and traded in this range before finally making that move on down into that next area of volume, is probably what we could expect to see here. If we can break through this area today, we'll see a smooth move up, probably grab some liquidity from there, come back down, retest the top of this range, consolidate for a while, and then we can move on up into this area and find ourselves consolidating in this range as well before making a decision from that point on to move up to the next level or back down here to do consolidate some more. Alternatively, we can get rejected again here today and find ourselves back down here in this range again, or even further move down into this range. So those are the scenarios. And any good trader is going to come in and that's what they're going to do. They're going to they're going to look at all the possibilities that can happen, and from that point on they can make their conclusion on what to expect. So, just to recap, today we can find ourselves wicking up, grabbing liquidity, coming down, and then find ourselves in this next area, ranging in that area. However, if we turn on the volume profile, there's really not a lot of volume to be consolidating inside of right here. So if we do find ourselves breaking through this area, then instead of here where we came down swiftly and moved back into the range, and if you go back and look, this happened when we broke out of this whole range here. It moved down, grabbed liquidity, then consolidated inside of this area of volume. Okay. In our scenario here, we're moving into this area. We've already moved into this area, consolidated, and now we're pushing up. So, unlike here, where you had a swift move down and then up back up into this area to consolidate, if we do that here, there's no area to fall back into to consolidate. We've already did the consolidating right here. All the trades, all the limit orders, all the stop losses have already been hit in this area. Okay, so when you look at the big picture like that and you understand where all the trading took place previously and where all the trading is taking place now, then the only logical conclusion that we could draw is to say, hey, if we move through this area of resistance right now, today, we're going to break right through this gap of volume. We're going to bust right through this area and we're going to find ourselves up in this area of volume and consolidating. So if we can push up through this resistance, we're going to find ourselves at a 20% move in almost no time. Now, yesterday we had, and I know that seems like a long way away, but it's really not. As you can see, yesterday on Wednesday, on Wednesday, we had a 10% move in one day. So, and then the area of volume that it had to travel through was not that light. Definitely not as light as the volume. I mean, look at this. There's no volume here. There's absolutely no volume here. And so this, we had a 10% move in one day through all this volume. So if you look at the momentum it took to move through that, imagine once we break through this area of support, resistance, excuse me, how fast that move will be up. That 20% move will happen so fast it'll make your head spin, just like it did over here when it dropped through this back in May of 22. 20% move. It took a few days, but huh, this one this one took a few days. So yeah, potentially break through this area of resistance, and within a couple of days, we're looking at to get up right around the $30,000 range, like it ain't nothing. Okay, so what can we expect to happen here? We know the possibilities what can happen now. So what can we lean on to get a better understanding of what the odds are for that to happen? Well, I don't really use the only thing I use the Fu Manchu Cipher B indicator for is the momentum waves and finding divergences. However, the money flow is a bit similar to Vuman Market Cipher B, but I've not really relied on that a lot. But if we go back historically and look at the times when the market was red, this whole period, where it's red here, I mean, we saw a sharp decline. And as soon as it flipped green, well, lo and behold, we saw incline. So if we look at the indicator based on those metrics alone, then we can daily time frame the Fu Manchu Cipher B money flow is A1. A1. Okay. And so coming to here where we are now, we're looking at the money flow, we're in the green. We're in the green and it's putting in higher highs on this money flow wave. So we can start from a top-down analysis just using this indicator. And let's drop down to a 4-hour time frame. And we can see also here, the money flow is green here. Okay. And if we go back to where this pump started back in January from coming out of the $16,000, $17,000 range. The money flow turned green right here, and we've seen that massive run up. Money flow started kind of dying down in this region, and then flipped red, and that's where we saw Bitcoin losing momentum and moving on down with that money flow. So once again, very accurate, just like the daily. This is amazing. This is amazing. I mean, wow. We could literally trade on the money flow alone using this indicator. I mean, we could literally almost trade on the money flow alone, swing trade when this thing flips green on the 4 hour chart, when this thing flips green on the daily chart. Okay. So right now, the money flow, we're in the green on both of those time frames of this indicator that historically has been a bullish signal. And we're printing a green dot on the 4 hour as well now. Now, I don't put a whole lot of faith in the green dots. Um, However, they do indicate that these momentum waves are clipping off and changing momentum. The momentum is shifting. Now, that doesn't mean, you enter a trade in it every time the green dot appears. You know, that's how you get wrecked. But for the most part, on these higher time frames, they do add a little bit of confluence to the overall market direction of what we're trying to decipher. Okay. And so if we look at the money flow, we look at the green dot on the 4 hour, we can definitely say there's a little gas left in the tank right here as we're coming into resistance. Now let's come down to the 1 hour time frame and see if we see any kind of divergences. Obviously, we're not putting in a higher high here yet, so we're not printing any kind of divergence. However, what I do see is a potential that does worry me a bit is this momentum wave. If it comes up as price was to move up, and if this puts in a higher high, well, I can almost guarantee you that this momentum wave is definitely going to be smaller than this node right here, and therefore this would be a higher high while the momentum wave is putting in a lower low, and that is on the 4 hour chart. And so that is a little troublesome because if you look here, after we got the pullback a few days ago and consolidated this range, we put in a lower low, but our indicator here put in a higher high. And the next thing that happened was a sharp move up. So that tells me that if we have a move up and put in a higher high today, I actually think that we may be in for a swift move down. And I know you're saying, hey man, you just said that if we break through that level, that it's going to be a smooth move up to 30K, right? 29, 30K region, 29.5, 30K region. And I did. And anything is possible, but we have to look at every angle. We have to do a multiple time frame analysis. We have to do a top down analysis. Okay. And so in the short term, I don't think Bitcoin has the momentum to make this move. I don't think that Bitcoin has the momentum right now to move up through that level of resistance today. if we put in a higher high, it is going to form bearish divergence on that indicator on a 4 hour time frame. On a 4 hour time frame. And we saw what happened previously when that happened. So I would be very cautious here. I would be very cautious. Now, for a short term trade setup or scout, I do see the possibility of us pushing up and putting in a slightly higher high here. I do see that. And so, what we could look for is a pullback to an area that we could try to find some confluence in real quick. And that's what trading is. It's all about being open minded, it's about being unbiased, it's about trading the chart, not trading with emotion. It's not saying, I think Bitcoin's going to 100,000. And I believe that. I'm extremely bullish on Bitcoin long term. But as a trader, and not an investor, we have to have very tight stop losses. And so we can't just hop in anywhere and say, "Hey man, I think it's going up to 100,000," without being able to live through a drawdown emotionally, mentally, financially. Okay. And so if you're DCAing into Bitcoin, I mean, this is not a bad area to buy Bitcoin. If you're an investor and you're looking to accumulate Bitcoin, this is not a bad area to add some Bitcoin to your bags. Not at all. But in the short term, what I do see happening is a pullback. Is a pullback. Um, if we put in a higher high, like I said, we're going to have divergences popping up on the 4 hour time frame. Fu Manchu Cipher B, the momentum waves. We can easily see that this next wave will be a smaller wave, and therefore, if this puts in a higher high, we're going to be higher high, lower low momentum wave. Obvious divergence forecasted. And once again, if we go back here, same time frame, when this came down, what did we have? We had a lower low, and here on our indicator, higher high. And look what happened after that. Look what happened after that. Right when that money flow flipped green, we had an early indicator, and we could have blasted up with that market. So if we flip those same metrics and reverse engineer it, and we can say, hey, here we are on the 4 hour time frame. Clear some of this googly glop off the chart here. If you don't know what googly glop is, you can look it up in the dictionary. It's definitely in there, I promise. So if we flip that same thinking around and we say, hey, here we are, 4 hour chart, momentum waves have the potential to put in a lower low here on this momentum wave. Let's probably put in a higher high. And if we look at our money flow, it's coming down. It is a lower low. And so it does have the potential to come down and cross back over into the red. And if we put in a bearish divergence here, and that money flow crosses over into the red, and even before that does, we can see a sharp move down. And since we've already came down and grabbed this area of liquidity, okay, we've already filled all these orders in out of this volume area, okay. If we've already hit all that, then we have no choice but to come down to this next high volume area. So I would say be very careful here. Be very careful longing. And if you are going to long, what we need to see is a good pullback. And so, as we can see, if we pull the fib here, We came absolutely, almost perfectly touched that golden pocket to the T. Okay. And we got a rejection. Now, if I was going to look for an entry to go long during this pullback, I would want to see an area that I would look to enter along. And in order to do that and find some confluence, let's pull a couple of fibs. Let's play with a fib for a minute. If I pull, as you can see, from that low to that high, look how it perfectly came down there and grabbed that 618. That's absolutely beautiful. Absolutely beautiful. I love the Fibonacci 618 golden pocket. I mean, it's absolutely perfect. Beautiful. Okay. So, if we pull the fib from that next low, then we do see that a 618 comes right in to this range area, value area low. Okay. And so we can put a little rectangular box right there, and that would be an area that might tickle my fancy to go long here on a short term scalp. Okay. And if we take that fib, we bring it to this swing low, to the swing high, you have a possible area right here. However, I don't see any confluence. Now let's see if we can add some confluence to either that golden pocket or to the rectangle we drew where the golden pocket and the value area come in at. Okay. What else do we have in that area that we might can find some confluence? I don't always use 4 hour candlesticks to draw support, but as we can see right here, that did act as resistance. And now resistance would be flipped to support coming back into that area. Okay. See what else we can scrape up here. Go to the daily. Let's put on a this is like a session volume profile. It basically will show you where, well, I've got it set up to where it just shows my point of control. And so if I'm on the daily time frame, that's showing my uh, point of control for the day. And then it also will show my previous day point of control. And in this case, that is a naked daily point of control. We can go ahead and pop that on the chart. And that would be something to keep an eye on. So we have a naked daily point of control there. Oh, and if we put on our weekly time frame, then we can also see that that same 4 hour support resistance bar we dropped also acts as acted as resistance on these two weekly candles. So we're going to make that a weekly. Okay. Now let's hop down to a smaller time frame. Now the only other thing I can really think to add for any confluence down here in the case of a pullback would be right there off the top of my head, um, the Fibonacci retracement tool. And so pull it from up here to down here. And then if this happens to be our local high, okay, that'll give us a 382 right there. Well, let's cut on our 236 because sometimes that can help us. And so that right now, unless we put in a higher high right here, that right there is going to give us a little bit more confluence at that point of control for this range. And Not really seeing much to come in at this golden pocket. Hmm. Yeah. So nothing extremely solid right here as far as like a specific level. If we to to long from, okay, but in looking for a short setup, I said we rejected right from that golden pocket earlier. Let's take a look on the 1 minute. Hmm. Not a lot of strength right here at this area of resistance. Oh, definitely going to get us a bit of a retracement here. So you could look to scalp this 618 here. Not financial advice. Make sure you always do your own research. Yeah, yeah. The more I look at it, the more I look at it, I think that this could potentially give us a good entry for a scalp. Not always, if I'm gonna enter at a level, then I always put it a little above the level, you know, in the case of getting front ran. Just like this golden pocket right here, you barely wicked into it for a hot second, and so you probably wouldn't even got an entry. So I always try to put my entry about $10 in front of um $10 in front of the where I'd like to get in at. And so what I like to do is project if that's my high and it comes down right to the 618. That's a 3 to 1 right there. So potential scalp setup right there. I mean, really and truly, you could probably short this right here, put your stop loss above that, and come down here, get a 4 to 1 in the meantime. Matter of fact, see about that. Not really seeing any divergences. Yeah, I don't know. Like I said, it's a pretty dangerous area to be trying anything in, especially when this thing is pumped as crazy as it has the last few days. I mean, let's just be honest. The trend has been your friend for over a month now, and so you go in and try and start shorting these things. it gets a little tricky, man. It gets a little tricky. So, you always want to have tight stop losses and use proper risk management. I always try never to risk. If I got say for instance, easy math, $1,000 in my account and 1% of $1,000 is $10. I'm not trying to. If my stop loss has to be zero point 0.5, half a percent away, then I'm only risking um in $10. Then um I can put my whole account on the trade right here at a 2x, and if it hits my stop loss, I still only lose 1%. So, or you can turn around and sometime I put 2% of my total account, which will be if you got $1,000 account, $20, and you 50x it, and that gives you a total of 100% value of your account, and then with your stop loss being 0.5% away, um, that's still going to only cost you 1% of your account. So, yep, that's what I do sometimes. Um, yeah, so let's see. 2:30 market closes. New York closes in about 2 hours. And stuff the craziest stuff has been happening later in the day about this time. It's just a volatile time to be in the market, man. It really is. I mean, and these areas of resistance, it's tricky to long, but at the same time, with this volatility, it's tricky to try to short the market. And I mean, if you look at all the macro data that a lot of people bring to the table on Twitter and YouTube, and all the funky charts and stuff, Crypto Love is a channel that's pretty good about. He's pretty good about bringing some really interesting charts and information that really point to the fact that the bull run has potentially commenced and the bottom's in. Um, oh yeah, I mean you got a lot of different information pointing to different scenarios. Let's look at some macro data. Let's look at the Dixie. Okay, so the Dixie has been dumping today. Wow. Okay, and as you can see here, I had a flag, nice bull flag drew out here that it finally broke out of, and went on a rip, went on a rip. But the measured move puts that breakout up here. So and I don't really, I'm not a big believer in measured moves. Typically, not to say they don't work, but I'm not putting my stop loss on a measured move or my take profit. Yeah, I mean, wow, the Dixie's really selling off, and we had a bullish retest right here yesterday. We broke out of this um, bull flag, you know, broke out, came down, had a bullish retest, boom. Okay, so now we're coming back down. Um, let's take a look at the S&P. See some ideas here. You see, you had this long-term trend line from back in January of 22. Rejected, rejected, rejected. We finally broke through. And overhead, we have these areas of resistance. As you can see, it's came right up to those areas of resistance. And as you can see, I got one scenario drew out here that it comes down to retest that trend line. Um, Surprisingly, even though the Dixie is pumping, the S&P is looking pretty weak. However, you can quickly see here we got quite a bit of a bull flag forming here. Um, wow, wow. And you had this bit of a rising wedge. It kind of jacked up the pattern here, but it actually it ended up working out anyway. It broke through the rising wedge. Um, Target on the rising wedge is the bottom of the wedge. Didn't quite make it down there. If it drags on out here, carries on, and retests down here, then that actually could play out. So yeah, I mean S&P not looking extremely bullish. See the Fu Manchu Cipher B printing a green dot here on the 1 hour. Um, and we can see that right here in the green dot. A lot of times I'll take these vertical lines and kind of boom. Oh. So, I don't know, guys. Come down, test the bottom of that flag formation. Wow, man, this could be kind of bullish. Wow, money flow is looking nice and thick. Wow. Okay. Okay. Man, I'm telling you, it's. Let's look at the uh, let's look at the 20-year bond yield. We want prices to go down. If you didn't know that, definitely want prices to go down on bonds. We did break that area of resistance. It's been bullish back since January 22, huh, which is when the S&P started falling. If you remember, we just looked at that. Let's see. I'm on the wrong button here. So yeah, if you didn't know, when bond prices rise, risk on assets fall. And if you go back and look to when this 20-year yield really started popping off, ironically, they put in that last low right here at December 21. Do you know what December 21 was? That was the time we put in the all-time high of Bitcoin. Let's pop a parallel chart here. Bitcoin. Okay. Let's go to the weekly. Get a little more data on the screen. Yep. Let's see. Yep. So, as you can see here, we put in that higher high. Lined up. Yes, we put in the higher high Bitcoin. Found the US 20 putting in this higher low here before making this massive run up. And so, as soon as that happened, we see what Bitcoin did. Did the exact opposite of what the US 20 did. Okay. And now, what do we see happen now? We see the US 20 break through this bullish trend line. Okay. breakthrough, and now we're getting a bearish retest. We're getting rejected. This is a weekly, keep in mind. And a weekly, it's a nice little wick forming. And it's actually, it's only got 2 hours left on this weekly candle. Wow. So in 2 hours, this weekly candle will close with a bearish retest of this long-term bullish trend line here. We broke through. Now the bearish retest. Wow. Wow. And now, if we take and look at the bottom that Bitcoin put in back here, well, right here, the FTX fallout, boom. We actually put in that last high of the 20-year bond. So, looking at those metrics alone, I would very easily say that looks like the bull run has started, ladies and gentlemen. I'm going to be so bold as to go ahead and say that. The bull run has started. Wow. Wow. Wow, guys. That's very significant. Very significant. And if you don't understand why that's significant, then you got to understand for hedge fund managers and wealthy people, wealthy traders, when you lose 1% of $100 million, that's $1 million. So, you know, you can't be in risky assets with $100 million during a recession or during inflation and all that. So what happens is they move into stuff that's safe. Because they can't let the money sit on the side. Inflation eats them alive. Taxes eat them alive. Operating costs eat them alive. So they have to move into safer bets. They have to be getting a return on their money regardless. And so what happens is they move into bonds because bonds are a very, very safe asset for now. They have been for decades. The U.S. government bonds have been very, very safe place to put your money and get at least somewhat of a return, even in times of hardship, like we have been in since November of 21. The entire market sold off, and since that's happened, well, the entire bond market went on a freaking rip, along with the Dixie. And so when assets are sold into dollars, the value of the dollar rises. And if assets are sold and put into government bonds, the value of those bonds, the rates rise. Okay. And so if you follow the smart money, if you would have followed the smart money right here and started seeing this bullish market structure begin to develop, that could have been a good indication of, hey, you know, when we start putting, we start coming down here, everybody's looking for higher, but if we could have looked at the macro and took a big picture in, we could have maybe saved ourselves some trouble. So, hey, looking at all that data, man, I'm really bullish. I'm really, 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 really bullish. So, yeah, like I said, in the short term, I don't see us quite breaking through this area. Um, Today, anything can happen. Anything can happen. Anything can happen. Matter of fact, let's see. So we come back up to that golden pocket. Yeah, we're getting rejected again. I don't know. It's trying to grow some legs. Oh. put in a slightly higher high, and we got a slightly lower low here. Yeah, we got some divergence form. We put in a higher high here, and we got some divergence popping up here. Oh, I said it's dangerous times to be shorting. Anything can happen. Anything can happen, man. Yeah, if you look here on the 1 minute, put in a higher high on price, higher high on price, lower low on momentum. If that rolls over and clips, getting here as well, higher high, slightly lower low, and go 12 minute. Yep, got it there. So a lot of bearish divergences right here, just on the small time frame. Not saying we're gonna crash, but yep, that's what I'm seeing. So I'm in a short from right here, and probably look to take profit at the 23,950. Make that 960. So I don't get front ran. Yeah, cool. Put a 0.2% stop loss there. Target 618 here. A little leeway. That's a 12 to 1. Actually, don't get wigged out. Let me move that up. I still have a 7 to 1, 24620. Yeah, it's like a nice little 7 to 1. See what happens. See what happens. back to a clean chart and pull that fib one more time. Yeah, so let's put some volume on here. POC right there, point of control. So got a little influence. Let's pop anchor VWAP on here, and let's throw on the VWAP stuff right there. Yeah, as you can see. Okay, so with that being the case, I would feel, funny thing about these volume profiles too, you got to kind of tweak them a little bit, but in this instance, I am above that POC with that stop loss, so I'll leave it like that. Better safe than sorry. Drag this over so we can track it in real time. Got an entry at 24507. How'd that happen? Okay. And stop loss at 246.90. Which I think I did that on another chart. Doesn't need to be that high. I was looking at these other POC. It really needs to be here. 246.40. Let me change that. Wait, you got a 4 to 1 ratio right there. But you know what? I'm gonna leave. Look, I got my stop loss at 246.90. Okay, it's cause these shenanigans. Okay, and that still gives me a 3 to 1. So I'm not gonna move the stop loss any lower. Leave it right there. Got a 3 to 1 risk reward ratio. Look for a 2.2% move. We get rejected right here off that POC. And if not, let's see. This math is not adding up. So this number, this should be 24507. I don't know how the math is adding up here. 0.73. Okay, I guess that's all right. So basically, if you put um, the full value of your account on this trade, your stop loss would still be less than 1% and give you a little room for slippage if it hits and trading fees. So this is an ideal setup. Where we're taking the trade from is an ideal setup. And we have the confluence for the setup with bearish divergences. Now this is just a short-term scalp. Just looked at everything, and the big picture is that Bitcoin is looking really bullish. Looking really bullish. Oh. Let's take a look at the Dixie, see what it's doing. Dixie's dumping, but it's finding support here. But that's why you can see the Bitcoin moved up here a little further than we anticipated, and that's because the Dixie has been dumping. Okay, as you can see, it's finding support right here. Okay, so if it can hold this level of support, we will see a little move up, and that will give Bitcoin to move down. We're potentially looking for. Potentially looking for. Okay. Let's see what happens. It is 3 o'clock, about an hour for New York closes. See what happens. All right, we are finding support here on the Dixie, and so we should see a little dump ski right here on the bitty. Well, Dixie is breaking that little area of support. Let's see if we get a dump here. Wow. Um, I could really see Bitcoin push on up. Let's zoom out of here. Oh, mm-mm. Whoopsies. Should have locked it. There we go. All right. All right, Dixie. What you gonna do? Well, I think I'm gonna save myself a little money and close this trade. Right on time. Right on time. Yep. Dang. Right on time. I don't know. The Dixie. Okay. Getting pumped. Now we're getting a pump on the Dixie. So that could send it on down. So yeah, probably ended that trade a little premature. Typically, it's best to leave your stop loss in place, leave the risk in place. So, but it's also good to cut your losses short and let your winners ride. Um, just a good rule of thumb. Well, guys, that's the TA for today. I said, looks like we are, in my opinion, very, very extremely humble opinion, we're in the bull run. And in the short term, we could see a minor pullback before garnering enough momentum to push through this area of resistance. So I'm gonna go ahead and hop off. Got some things to do. Appreciate you watching. Be blessed.